The year was 2021. A small, seemingly insignificant nation, El Salvador, made headlines not for a political upheaval or natural disaster but for adopting Bitcoin as legal tender. At the time, many dismissed it as a curious experiment, a radical gamble by a developing country. Yet fast forward to 2025, and that decision, once ridiculed, now looks less like an anomaly and more like a crack in the dam of the traditional financial system. A ripple that has since turned into a growing wave impacting global geopolitics in ways few predicted. We're not talking about digital coins for online purchases anymore. We're talking about a quiet revolution challenging national sovereignty, economic power, and the very stability of international relations. This isn't just about anonymous transactions or speculative trading. It's about the fundamental re-architecture of money itself, and the implications for nations, alliances, and global power dynamics are staggering. In this video, we're diving deep into the fascinating, often unsettling future of geopolitics in the era of cryptocurrency. We'll uncover how digital assets are empowering rogue states, undermining sanctions, and forcing global powers to adapt or risk being left behind. We'll expose the hidden tensions, challenge the conventional wisdom about financial control, and reveal a truth about this digital revolution that could completely redefine the 21st century global order. The traditional global financial system, established largely after World War II, is built on a foundation of national currencies, central banks, and a network of correspondent banks that, facilitate cross-border transactions. This system, dominated by the US dollar and the SWIFT messaging network, has long served as a powerful tool for geopolitical influence, enabling sanctions, controlling illicit finance, and providing stability for international trade. However, the advent of decentralized cryptocurrencies like Bitcoin, which operate outside the control of any single government or financial institution, presents a pretty profound challenge to this established order. The core disruptive potential really lies in their permissionless and censorship-resistant nature. For nations targeted by sanctions like Iran or North Korea, or for groups seeking to circumvent traditional banking oversight, cryptocurrencies offer a potential lifeline, enabling them to conduct transactions, raise funds, and even engage in illicit activities without relying on the very systems designed to restrict them. In 2025, we're seeing a significant uptick in states exploring and even implementing central bank digital currencies, CBDCs, which are digital versions of their national currencies controlled by their central banks. This isn't about embracing decentralization. Honestly, it's more of a defensive maneuver. Countries like China, with its digital yuan, are trailblazers, aiming to exert greater control over their domestic financial systems, improve financial inclusion, and potentially offer an alternative to the dollar-dominated international trade system. The controversial opinion here is that while central bank digital currencies are often framed as an evolution of money, they actually represent a significant step towards greater state surveillance and control over individual financial activity. They promise efficiency and inclusion, but, at what cost to privacy and freedom? Some argue that central bank digital currencies, far from being a benign innovation, are a tool for authoritarian regimes to tighten their grip on their populations, and a mechanism for even democratic governments to wield, honestly, unprecedented power over their citizens' spending habits. This move, driven by the desire to counter the disruptive potential of decentralized cryptocurrencies, paradoxically risks eroding the very principles of financial privacy that many crypto advocates champion. The impact of cryptocurrency on state sovereignty and national security is a multifaceted and growing concern. For states, the proliferation of decentralized digital assets poses several challenges. Firstly, monetary sovereignty. Governments traditionally control their money supply, which is a cornerstone of economic policy. Cryptocurrencies, with their fixed or algorithmic supply mechanisms, challenge this control, potentially limiting a central bank's ability to manage inflation or stimulate economic growth. This is particularly concerning for nations with unstable currencies, where citizens might flock to more stable digital assets, further undermining national monetary authority. Secondly, illicit finance and sanctions evasion. The pseudonymous nature of many cryptocurrencies makes them attractive to criminals, terrorists, and sanctioned entities. As of 2025, governments globally are grappling with how to monitor and regulate crypto transactions without stifling innovation. Iran, for example, has reportedly used Bitcoin mining to circumvent US sanctions, converting energy into a global asset. North Korea has been extensively documented using stolen crypto to fund its missile programs. While law enforcement agencies are developing sophisticated tools to trace crypto transactions, the sheer volume and global reach of the crypto market make comprehensive oversight incredibly difficult. The US, as the primary enforcer of global sanctions, faces a complex dilemma. How to maintain its geopolitical leverage when a significant portion of the global financial system can operate outside its traditional oversight. Thirdly, cybersecurity risks. The infrastructure supporting cryptocurrencies, including exchanges and wallets, is a prime target for cyber attacks leading to massive financial losses and potentially destabilizing financial markets. Nation-states are increasingly implicated in these cyber heists, using them not just for financial gain but as a tool for geopolitical disruption. So, the controversial viewpoint here is that for all the talk about decentralization and freedom, the way crypto regulation is currently heading, mostly driven by national security concerns, well, it's probably going to result in governments having more, not less, control over digital assets. Instead of becoming a truly free form of money, the existence of crypto is actually pushing states to build stronger digital borders and ramp up surveillance capabilities. This could mean a more controlled and less open internet, even in countries that are considered democracies. Some folks argue that this push for control is ironically the ultimate outcome of a technology that was supposed to be all about liberation. The competition for cryptocurrency dominance and regulatory leadership, honestly, has become a brand new front in the world of geopolitical competition. The United States, after being a bit cautious at first, is now, actively working to shape global crypto regulations through big international groups like the Financial Stability Board and the G7. The main goal here is to set up a framework that keeps the financial system stable, fights against illicit finance, and protects consumers, all while making sure the US holds on to its leadership in the global financial system. The European Union, with its comprehensive markets and crypto assets regulation, is really a trailblazer setting a global standard for crypto asset regulation. Its approach emphasizes consumer protection and market integrity, and could potentially influence other jurisdictions around the world. China, on the other hand, has taken a much more draconian approach, banning crypto trading and mining internally, while aggressively promoting its digital yuan, or central bank digital currency, as a tool for domestic financial control and international trade settlement. This dual strategy aims to eliminate decentralized crypto's threat to its internal control, while establishing its own state-controlled digital currency as an international alternative to the dollar. The controversial opinion within this arena is that this regulatory race isn't primarily about protecting consumers or ensuring financial stability. It's actually a subtle but intense battle for digital monetary hegemony. The nation or bloc that effectively sets the global standards for digital assets, whether decentralized or state-controlled, will gain significant geopolitical influence. If a central bank digital currency like the digital yuan gains widespread international adoption, it could potentially undermine the United States dollar's role as the world's reserve currency, fundamentally shifting global power dynamics. The United States and its allies face the challenge of striking a balance regulating crypto enough to mitigate risks, without stifling the innovation that could maintain their technological edge. Too much regulation could push innovation offshore, but too little could expose them to systemic risks and enable adversaries. This regulatory chess game is honestly less about blockchain and more about the future architecture of global power. The rise of stablecoins and decentralized finance or DeFi platforms adds another layer of complexity to the geopolitical landscape. Stablecoins, which are cryptocurrencies pegged to the value of a fiat currency, like the US dollar, or a basket of assets, have seen explosive growth. They are increasingly used for international remittances, cross-border trade, and as a bridge into the broader crypto ecosystem. For developing nations, stablecoins offer a potentially more stable alternative to volatile local currencies, or even a way to circumvent capital controls. However, their proliferation raises significant concerns for financial regulators globally as of 2025. They pose risks to monetary policy, financial stability, especially if not adequately backed, and can facilitate illicit finance if not properly regulated. The United States is particularly concerned about the dominance of dollar-pegged stablecoins issued by unregulated entities, fearing a loss of control over a significant segment of the global financial system. DeFi, a rapidly evolving ecosystem of financial applications built on blockchain without traditional intermediaries, pushes the boundaries even further. It enables lending, borrowing, and trading directly between users, bypassing banks and traditional financial institutions. While offering potential for greater financial inclusion and efficiency, decentralized finance also presents immense challenges for regulation, consumer protection, and anti-money laundering efforts. The controversial perspective here is that the global regulatory response to stablecoins and decentralized finance is not about mitigating risk for the public, but about preserving the power and rent-seeking capabilities of traditional financial institutions. Banks, which traditionally profit from being intermediaries in financial transactions, see decentralized finance as an existential threat. Governments, in turn, are pressured by these institutions to impose stringent regulations that might stifle genuine innovation and ultimately limit financial freedom for the masses, all under the guise of consumer protection or financial stability. Some argue that this resistance to decentralized finance is a desperate attempt by entrenched powers to maintain their grip on a system that is fundamentally being disrupted, potentially at the cost of broader economic efficiency and individual financial empowerment. The tension between innovation and control, and between traditional finance and decentralized alternatives, is a microcosm of the larger geopolitical struggle playing out in the crypto space. So, in conclusion, the era of cryptocurrency is not just a technological shift, it's honestly a geopolitical earthquake that's, challenging long-held assumptions about money, power, and national sovereignty. From El Salvador's bold move in 2021 to the current race for central bank digital currency dominance, the struggle for control over digital assets is, honestly, fundamentally reshaping international relations. We've seen how cryptocurrencies offer lifelines to sanctioned states, force global powers to, redefine financial surveillance, and spark a new kind of monetary competition. The controversial opinions we've explored, whether about the true purpose of central bank digital currencies, or the motivations behind decentralized finance regulation, really highlight the deep-seated tensions beneath the surface. The outcome of this digital revolution will determine not only the future of our financial systems, but also the very balance of global power. Will it lead to a more decentralized and equitable world, or to an era of, unprecedented state control and digital borders? The answers are still being written, often in lines of code and regulatory frameworks, and it's a conversation that honestly, profoundly impacts every one of us. Stay curious, stay informed, and make sure to subscribe to continue exploring these critical narratives with us.